Hello, thank you for joining me as I walk through probably one of the most unique indicators I've ever seen called expected high-low strategy. Now, this is actually an interesting indicator. It's not a strategy per se, although it does have some rules for entry and exit, but it's really looking at the effectiveness of trading the floor pivot levels for any market you want to look at. And what I mean by that is basically, it's an entry short when we hit the resistance 1, resistance 2, resistance 3 levels, or it's buying when we hit the support 1, support 2, support 3 levels. And we look at the effectiveness of doing that in a market, and we backtest those results and show them in summary format here on the chart. So let me show you an example of what I mean. So right here, this is on March 13th. The micro YM moved into, this is Thursday the 13th, you can see that. This pink or magenta line up here is the resistance for that day, R1, and the green level down here is the S1 level, the support level for that day. And the idea is to buy, is what we show here by the green. We buy at this green level, and we just buy once price hits that level. And if we were to do that, and if we were to hold on and exit out sometime later at 15:30, I believe I have it exiting. How profitable is that strategy? Again, buying at S1 or selling at R1 and holding until 15:30 in the evening. And that's what this strategy does. So here we see we actually had a slight loss. We bought at, this was 11:45 in the morning. We held on through the day. We had a little bit of a heat taken against us. And we exited at 15:30 for a small loss. Let's see if we have that information. No, we don't. Well, let's take a look at a prior day. Now look at this day. Fascinating look here. So this is an interesting day. We hit the resistance at right at 8:35 in the morning. Took just a couple of ticks against that position, went short at that resistance, and we held. Now, one of the rules is you reverse it if we hit the other end of the floor pivot. So we do hit R1, sorry, S1, support 1. We hit that, and we had a really nice profit that day on the first trade. So that was a $452 profit in the micro YM. Not too shabby. Now, we do reverse at that point. We took a very small amount of heat. You should probably be able to see that, just a couple of ticks. And we exited that position again at the time of 15, and maybe on 15:50 is when I'm exiting. And that was a nice profit. Again, we went long at support 1 and we exited here for $190 in profit. So a really nice kind of wire to wire to the close move in the micro YM. Let's take a look at another one. Now again, just blindly, we're going to be buying at the support level, exiting at the basically go flat time, which is 15:50. So there it is right there. Had we done that on this day, which is the 11th of March, we took a little bit of heat. Let's do a measurement of how much adverse move we had. We took a $132 move against us, but price came back and it did finish in the green. And our profit for that day was about $98. Not too shabby. So it's a really quick way to test our profitability on buying at S1, selling at R1, and overall, let's take a look at some of the statistics that we get here. So the total net, if we were to do that on the 60 trades, we're on 90 tradable days. You see that here. I've got quite a number of days in our chart here. There were 60 trades on those 90 tradable weekdays, that actual trading occurred. We're doing about almost, 7/10 of a trade a day. Sometimes we don't have a trade on a day, on a very narrow day. But the average trade comes in at $11 profit. Profit factor is 1.3 to 1. And again, this is the micro YM, so $11 a trade is pretty good on the micro YM. You know, that's not too shabby. Here's the win-loss ratio, so WL. 27 wins and 32 losses. We're only winning 45% of the time. When we go short at R1, we're winning 10 and we're losing 14, and that's a 42% win rate. The average trade on the shorts is not too bad, $32 in the micro YM, profit factor 1.4. The mean adverse excursion is $84, so we do on average move against our position by $84. But the mean favorable excursion is 70. And let's take a look at the longs. So on the long side, if we buy at S1, we're winning 17 out of 18, not too bad, 49% win rate. And again, average is $16 on that trade, and it's a good sized profit factor of 1.2. The mean adverse excursion is $44, so not too much against us. And mean favorable is listed here. So let's take a look at the hour of day for entry. Now, when is the best time of day to enter this trade? So when price first crosses the support or resistance level, in this case, this happened at 8:20 in the morning. So what I do is a simple calculation of when is the first trade that crossed, and that was, in this case, it was 8:20 in the morning. Because we filtered out anything before 8 o'clock. So these trades only occur from 8 to 13:30, and that's parameters. You can set that by parameter if you want to analyze earlier in the day or later in the day. So it ignores everything before 8 o'clock. That's why it ignored this touch right here. But whenever we hit 8:20, 8:20 is between 8 and 8:30. So right here, this was a losing trade. It was winning for quite a bit of time. It did reverse to a loser. Of course, if you're in this trade, it wouldn't be too bad to have, trailed it with a trailing. But that is not being taken into account here. So 8 to 8:30, the trades don't usually turn out too profitable. We've only won 1 out of 5 trades. 4 losers, 1 winner. 20% of the time is a winner. And we've lost a net total of $419 if we trade from 8 to 8:30. So this is a risky trade. Only 1 out of 4 times have we won when we trade between 8 and 8:30 when we enter the market. Now, if we were to trade here when it touched the market again, that's at 9:30 bar. 9:30 is pretty profitable. So if we were to trade at 9:30, you can see that this hour of the day analysis from 9:30 to 10 o'clock is this green line. We win a total of almost $400. We're profitable 59% of the time, and we have 10 wins and 7 losses. That's really good win rate. So had we traded here, typically throughout the history, then we do actually a little bit better. So that's good information to know. What I would be looking at is when I came into this area and I see that we have basically an overall winning pattern at this time of day. If we either sell at R1 or buy at S1, I would be looking for a move upward off of S1, right? So we come into here, I would think I'm not really going to buy at support 1 because we do have some adverse excursion here. I would want to look for a touch of R1, or S1 in this case, a touch of S1 and a move above the swing high. All right, well that kind of softened up. Market didn't get up to that level. We pushed down into a new low. I would move my entry to be above this swing high. Now, I like to trade something I call exhaustion triangles. this is a nice little exhaustion triangle. You see that? We had a low, a kind of a weak high, but it went to a new low on the day, and this is then right up here, this apex is a strong high. It's a strong high because from that high, prices push through the low to a new low. So that's a strong point. When prices come up and push through a strong high, that's pretty significant. Something happened in the market. If you do that, look at that interesting retracement right down to that strong high. But I would be buying right about here in this area, and you can ride that for a very nice little profit here. So there's a couple ways to trade this. You can either just trade it blindly buy it when we hit the S1, blindly sell it when we hit the R1, or do my little trade triangle idea. All right, so that's all the days we've got here. Let's see if we move back a little bit more. Let's find some more trades. So again, we bought it at support 1, and this was at about 8 in the morning right off the bat. Buying, we only get 1 win out of 5 trades. So this one just had a small winner, and then it resulted in a bigger loss. Here's a good one. This one occurred at 11:30. 11:30 trades are profitable overall. So if we enter, I would be very confident to enter when we hit at 11:30. I'd say, oh, that's an interesting time. 57% win rate, and our total is 353. This is a beautiful trade. This trade was a $219 winner in the MYM. So it's a good little way to take a look at those kind of trades. One thing also, oh, I forgot about this. We also break it down by the day of the week. So Mondays, 7 wins, 7 losses, but the average loss is greater than the average win, and we end up losing $157 on that day. But look at this, Tuesdays and Wednesdays are great times to trade this blindly. Basically buy at S1, sell at R1. Thursday and Friday, Friday's not much happening there. $200 loss on Thursday, $32 loss on Friday. But you just don't trade those days. Really, this is a great strategy just for Tuesdays and Wednesdays. Let's see if we take out Tuesdays and Wednesdays. Let's see if that does any better. So I'm just going to trade Tuesday and Wednesday. So we can specify a day of the week for this indicator. Let's go ahead, hit OK. Let's see how our P&L does. Just by trading only Tuesdays and Wednesdays, you can see the numbers are down here. We are up $1,057 total on just 18 trades. Perfect. Look at that profit factor, 3.4, $59 per trade on a micro YM. That's unheard of. So this is something you want to take a look at. Let me give you a little hint. Tuesdays and Wednesdays, sell at resistance, buy at support between the hours of 800 and 1330, and then just exit out at 1550. So there you go. There's a nice little indicator called expected high-low. If you have any questions, and maybe you want to think through this a little bit more, feel free to dialogue with me. I'd love to discuss this and show you some, or maybe answer any questions you've got regarding how this is calculated or how this works, or how you might want to use this valuable information in your trading sequence.